Hi. Yeah, as I mentioned earlier, the market, like what Warren Buffett say, now the fear is at its greatest. Does it mean that we should fear the market, or that it's actually the greatest opportunity for us? So, like I mentioned before, nobody would know where is the market bottoming, or whether it can sustain at pre-pandemic 9,000 for Nasdaq. Now it's at 11,200. So, of course, we will need to see the correlation of the P&L by, let's say, a similar company, let's say Tesla in 2019 and 2022, see whether with higher input costs for them, uh, meaning higher salary and higher raw materials, and uh, and also the possibility of lower in demand, purchasing spending power, and then are they able to sell at a higher price so that they can maintain the 2019 profit margin, and the 2022 profit margin will maintain the same, and at the same time higher sales. So of course we need to look for companies like that, and I think Tesla, Mosaic, fertilizer companies, or even oil would be the beneficiary, because there's been quite a lot of oil sanctions for Iran and Venezuela and all that, and there's a shortage of oil from Russia as well. So some of these US companies may benefit in the near term or long term or medium term. Yeah. So I will do that in another video one more day to study whether the correlation between the pre-pandemic 2019 P&L, i.e. a Q3 and a Q4, and or a prediction on our Q2 and Q3 for 2022. So of course, the rule of thumb is still to go into company whereby even with all these high input costs and high from salary, from human capital, as well as raw materials, they are still able to sustain good demands, and be able to price higher and still yet able to sell. Then these companies would definitely be investable. The second point I'd like to share with you today, continuation of my earlier videos, is about this famed economist. He did mention that the Fed raising interest rates alone won't fix inflation, and the US needs a different kind of intervention. It's a Nobel Prize winning economics, Joseph Stiglitz. And of course, he did mention that some very interesting, very basic point. Raising interest rate alone is not going to solve the problem of inflation. It's not going to create more food. That's very straightforward and direct, and very clear. It's going to make it more difficult because you are not going to be able to make the investments. Yeah, because company need to do investments as well, and they need loans to do investments. And right, raising interest rates actually, too much will not create a soft landing. It will prohibit companies from doing further capital investments, and I think it will also crash the housing market. And I think this is one of the housing property market that is the one of the few markets, few sector of investment that hasn't actually go down. Because I think property market will not go down because they are considered as core items. Housing needs, energy needs and food needs are actually considered necessities. Of course, Fed has already been behind the scene, increasing the rates or even creating the fear itself. Uh, Perceptions of fear that is sufficient to powerful enough to reduce people's spending, make people consumer more careful. And I think government-wise also, Biden has been visiting different countries in Asia and all that to create diplomacy, more direct trades. Because as you can see, China and Russia are slowly not cooperating, together with some other other countries, other sanctioned countries like Iran and Venezuela, who are also oil and gas producers. Other than that, you see government side as well also are working on giving more care to the children. That will mean that women can go into the labor force. 1 million women haven't been able to return to the work after COVID pandemic because they can't afford childcare. So the 1.7 trillion Build Back Better legislation will help as well. So killing the economy through raising interest rates is not going to solve inflation any time frame. So and all this linear thinking by Bill Ackman and all that about raising interest rates, being hawkish, or Jim Cramer saying all these things about interest rates is the only thing and they have to increase as high as possible to crash the market to stop people from buying, it's not going to help. There are uh, combined complicated factors that are needed. As you can see, anyway, if you look at April itself, it has already eased by 0.2%. And let's come to early June to see whether May it will drop a bit further. I suspect it will to maybe below SAP 8. And there are signs of easing inflations. And I think June will be a good time for market to go up again. Um, so that is something that I need to look into. What else? Let me see. Yeah, I think that's about it for today. And hope you like the video and can see all the different possibilities that are unraveling as we go along. Thanks a lot for watching the video, and please like and subscribe. Thanks a lot.